Okay, hello guys, how we doing today? Welcome to another episode of What I Think Media, your number one stop for information, entertainment, and enlightenment. Okay, so today we'll be talking about something very interesting, and that is mutual funds. Mutual funds. So we'll be going through the definition of mutual fund, and I'll be doing my best to kind of explain what it is all about. Okay, but first, before we proceed, if you are new to this channel, please like, share, and don't forget to subscribe, because that's how we get the word out to people that might also love to know more about financial independence. Okay, all right. So having said that, what is mutual fund? Okay, I will be defining mutual fund from Investopedia. Okay? So Investopedia defines mutual funds as a mutual fund is a type of financial vehicle made up of pool of money collected from many investors to invest in securities like stocks, bonds, money market instruments, and other assets. Mutual funds are operated by professional money managers who allocate the fund asset and attempt to produce capital gain or income for the fund's investors. A mutual fund portfolio is structured and maintained to match the investment objectives stated in its prospectus. Okay, so what did I just read? Let me break it down. First, a vehicle. So mutual fund, when you say it's a vehicle, it simply means that it is like a bag you use for your grocery shopping. When you go for grocery shopping, you don't go there to buy one item oftentimes. You go there to buy a bunch of stuff. Let's say you're going there to buy some stuff to make your maybe soup. You're going to get some stuff to maybe for breakfast and all that. You have categories of this stuff. Buy breakfast, for things you're going to use for lunch, it's going to use for dinner. That's simply what mutual fund is. It's a vehicle, but it's a vehicle for financial investment that helps you diversify your portfolio, which is the main advantage of mutual fund. If you, for example, you are looking at buying stocks of technological companies, and we have quite a lot of them, what do? You start looking for these companies individually and buying them individually. Some are very expensive, some are within your reach. But in a case where you don't have that time to be researching all the companies in the technological space, but you want to invest in technology, what do? You invest in mutual funds. By investing in mutual fund, what you have just done is you have given your money to the money managers to help you invest in these sectors by themselves, because you believe they have done the research and they are in the best position to make decisions of how your money should be invested. Okay, so now, yes, we have understood that part. Then, what other sectors can mutual fund play a role for you to be able to invest? Like I said before, you can invest in stocks, you can invest in bonds. So now, the stock market is very large. Very large. There are a lot of companies being traded on the stock exchange. For instance, you want to invest in all of it. It is possible through the help of mutual fund. You want to invest in some part of it. It is possible through the help of mutual fund. I will be talking about some mutual fund that gives you that privilege to be able to do it. Okay? So I believe we have a proper understanding of what mutual fund is all about now. All right. So now, what are the various types of mutual funds? I'll be talking about just two types. There are several others, but I'll be talking about just two. The first one is index funds. Okay, index funds. So before I proceed further, let me share with you what Investopedia define index fund as. Okay, all right. Investopedia defines index fund as another group which has become extremely popular in the last few years, just letting us know that falls under the index fund. Their investments. So now, index funds. What is index fund? Said index funds investment strategy is based on the belief that it is very hard and often expensive to try to beat the market consistently. In other words, if the market is up today, you are not sure that it's going to go up tomorrow. So there's a lot of inconsistency. So how do you balance it out? That's what index fund is mostly all about. So the index funds manager buys stocks that correspond with a major market index, such as the S&P 500 or the Dow Jones Industrial Average. So this strategy requires less research from analysts and advisors, so there are fewer expenses to eat up return before they are passed on to shareholders. So these funds are often designed with cost-sensitive investors in mind. In other words, if you know you don't have too much money to spend, you are minimizing cost. You can invest in index funds. But like what we just read, because of the volatility of the market and because of how unpredictable the market can be, you can invest in a stock today and tomorrow a news comes out and the entire portfolio of that particular company is gone. Okay, so that's the risks you face buying an individual company. It is good because when they appreciate, sometimes they appreciate really, really good. But the downside is that whenever there is a bad news from the company, every penny you have there is at risk. And a stock that is worth $20 today can become $1 tomorrow. You cannot predict. But the beautiful thing about mutual fund is that if you have your money in mutual fund, if one company goes down, your entire portfolio does not go down. Though it's going to reflect, but the damage will be very, very minimal. Okay, that's the beauty of mutual fund. And the particular mutual fund we're talking about, index fund. So in this particular index fund, invest in specific areas. And what are the areas? The S&P 500 or the Dow Jones Industrial Average. S&P 500, Dow Jones Industrial Average. When you talk about S&P, we're talking about the top 500 companies. Top 500 companies. Those are big multinational companies. So when you have your money there, there's nothing to worry about. You are rest assured that your money is safe and secure. Okay, that's for index fund. Then the last one I'll be talking about is ETFs. ETFs, which is short for exchange traded funds. Okay, exchange traded fund. So what is ETF all about? I'll read what Investopedia talks about ETF. Okay, it said these ever more popular investment vehicles pool investment and employ strategy consistent with mutual funds. Yeah, it's part of it. But they are structured as investment trusts that are traded on stock exchange and have the added benefits of the features of stock. In other words, when you trading ETF, it's like you're trading stock. But the beautiful thing is that your money is being invested in several companies. Several companies, take note, not just one or several, but it's traded as a regular stock you buy and sell on a day-to-day basis. So for example, ETFs can be bought and sold at any point throughout the trading day. ETFs can also be sold short or purchased on margins and other. But what it's just trying to say here is that when you buy ETFs, you can trade it like you trading regular stock, but the only difference is that you are not trading just one stock. You are trading multiple stocks, lots of stocks. Like for example, we want to talk about the index fund. The index fund, you can trade the top 500 companies on the stock exchange. Same thing you can do with ETFs. You can trade the top 500 companies if that's what you want, but you can also trade other companies or other sectors you might be interested. If you're interested in technology, if you're interested in consumer goods, if you're interested in healthcare, whatever area you're interested in, you can trade it on ETFs, because ETF is just like the younger brother to index funds. Okay, just like the younger brother to index fund. There are certain limitations that you have on index funds, which number one is high cost of maintenance, because you pay those money managers for them to be able to manage your account, and whatever you pay them varies from 1% to 10% depending on the particular mutual fund you are using. For example, if you are using the index fund, you can pay as high as maybe 1 to 3%. But if you are trading on ETFs, it is even less than 1% per annum that you pay for your total investment. So that's one thing you also need to consider, because when you're doing this investment, you should always put the cost into perspective. For example, let's say you've been able to get a good return of like 10% or 8% at the end of the year of your total investment, and now you are going to pay a fee of like maybe 3%. It doesn't make any sense. So what do? You try to look for good ETFs, very important, good ETFs, but with low cost of maintenance, which is the fees. And number two, those people that manage the index fund, they claim to be the professional money manager, but the thing is that whatever happens to your portfolio, it doesn't concern them. If you lose in the market, boom, you still have to pay. You make profit, you still have to pay. So what's the point? So I'd rather take my chances with ETF, where I don't have to pay no professional. Theirs is just to help me buy it, and that's it. I ain't got no business with them anymore. Simple and short. Okay, so if you're considering investing and you look for a safe vehicle to put your money in mutual funds. And if you are thinking of which of the mutual funds might be good for you, try considering ETFs. ETFs, they have virtually all portfolio that index fund have. They have all. So you are really missing nothing if you invest in ETFs. All right. So having said this, I hope you guys are well informed on mutual funds, and in particular index funds and ETFs. These two are more of the very popular mutual funds as at now that a lot of people are taking advantages of. There are others, but these two are more popular, and they are far more easy to understand and manage. All right, they have disadvantage. So let me quickly go through what the disadvantages of mutual fund according to Investopedia. Then we'll call it a day. Number one, they said liquidity. Number two, diversification. Number three, minimal investment requirements. Then number four, professional management, depending on which of them you are using. Is it index fund or ETF? That's where the professional management comes in. A variety of offerings. Yes, you have variety to invest in any kind of stocks you want, in in technology, in consumer goods, in healthcare. If you want to invest in healthcare, there are lot of ETFs on healthcare that you can invest in. You know, though some of them might be highly volatile, but it is business. No risk, no reward. All right. Then what are the cons, disadvantages? Number one, like I said before, high fees, commission, and other expenses. You know, when you're dealing with index funds, there's a lot of fees, mostly high fees you have to take care of, which is not really going to be good at the end of the year because it's going to eat into your profit. Then large cash presence in portfolio. Like I said, in index fund, you need a minimum of $3,000 to be able to invest. If I haven't said that before, take note. For index funds, you need a minimum of $3,000 to invest in it. You cannot invest in index fund without having up to $3,000. That's one of the barriers. But if you have more than 3,000, you can invest in index fund. But just know that you're going to pay in high fees. But in ETFs, you do not have those limitations. There's no limitation. All you just have to pay is the maintenance fees at the end of the year, which is very, very low. Then also it does not have, you know, insurance. Then difficulty in comparing funds, you know. Then lack of transparency in holdings, you know, depending on who is managing. If maybe somebody is managing your portfolio, that's where this really comes in. But in general, everything in life is all about risk, especially when it comes to business. So what can you do? Try as much as possible to do very good study of a particular ETF you want to invest in, so that you will understand better and know where your money is going to. Yeah, there might be lack of transparency in holding, but if you dig deeper, you'll be able to find whatever you are looking for. Okay, so without any further ado, let's call it a day here. So before we go, please try to subscribe, like, and drop comment so that other people can see this video and benefit from it. So having said all that, have a wonderful day. Peace.